Greetings, Cretan learners. My name is Mr. Simbi and welcome to today's accounting class. In today's class, I have a very exciting topic. Debtors journal. Debtors journal. Did you know? In order to increase sales, a business can decide to sell goods on credit. My objectives for today are as follows. By the end of the lesson, you should be able to identify credit sales transactions, understand basic credit concepts, prepare the debtors journal, post from the debtors journal to the general ledger and to the debtors ledger as well. Create a debtors list. We are also going to prepare a trial balance, and we are also going to do the accounting equation. So I want you to stay tuned because today's class is going to be an exciting class. Now, at this moment, you already know the preparation of the DJ, and you already know the calculation of sales when given the markup. Some of you have a method called the UK method. I'm going to explain that today. Posting to the general ledger is also something that you already know. And by now, you already know the completion of the accounting equation. Here are new words and language that I'm going to introduce to you today. The first one, the screening of debtors. This is checking the following aspects of prospective credit customers. That is, before we can sell goods on credit to a customer, we have to check some things to see if they will be able to be reliable credit customers. What can we check? The first one, credit rating at the bank, past records, that is their records of paying, that is their credit history as well, proof of residential address, bank statements. We also check our prospective customers' bank statements, especially if they're going to be credit customers. Employers' details and salary slips. Now, the next term is credit terms. Credit terms. What are credit terms? The terms offered by the seller to the buyer of the maximum time allowed for repayment. In other words, when you buy goods on the 1st of January, how many days do you have to pay? Those are your credit terms. The next one is credit limit. Credit limit. It is the maximum amount to buy on credit. Are you allowed to buy goods for 1,000? Are you allowed to buy goods for 3,000? Or you're allowed to buy goods for 10,000? So that amount is what we call the credit limit. Now, we're quickly now going to go on to the definition. What are credit sales? When the business sells goods to clients who will pay at a later date. So we sell goods, but then they pay us at a later date. A debtor, the person that owes other businesses money. Okay? So in this particular case, a person or a business that owes our business money. The debtors journal. This is the subsidiary journal in which all the credit sales are recorded before they are posted to the general ledger. Only credit sales of trading stock are entered in the debtors journal. Debtors ledger, an account is opened in the name of each debtor. So each debtor is going to have an account opened in their name. Therefore, it contains the individual or the personal accounts of each debtor. Now, I'm going to introduce you to a source document. A source document, and this is what we call the duplicate credit invoice. The source document used when stock is sold on credit. Okay, so when stock is sold on credit, it is called the duplicate credit invoice. Why? Because the original invoice is given to the debtor, and then the seller keeps the duplicate credit invoice. Dear learners, we're going to go for a quick ad break. I'm going to see you after the break.